Hello, everyone. Welcome back. I got some really good ones for you today on this Sunday, October 26th, 2025. A lot's been going on with those markets, the economy, the changing global order, interest rates, inflation, asset prices. The big stuff, guys, the stuff we like to focus on with this channel. So, welcome back. I'm glad you made it. I'm glad we could hang out together. And let's dive right into these big issues, okay? Let's tune out the noise. Let's not be like the mainstream media where the market constructs us instead of serves us, and we just react and blow around in the wind. Since I started this channel in May of 2022, we've been focused on things like gold, which was 1,700 and is now 4,200 per ounce. Silver, which was like 20 per ounce and is now 50. Bitcoin, which was 28,000, is now 115,000. The NASDAQ, which was 11,000 when I started the channel, is now 23,000. We've been over the target, guys. We've been talking about sticky inflation. We've been talking about the dollar weakening. We've been talking about how the middle class is being eviscerated. We've been talking about how as empires collapse, it doesn't collapse in the way you think with deflation, but there's a golden parachute that is given to the 1% of every failing empire as asset prices crash up because the value of your labor and your savings is crashing down. Demand for dollars falling. Dollars still liquidate the global economy. We still have the world reserve currency. The dollar empire is still strong in many respects, but has been weakening on an annual basis. And it's tangible, it's noticeable. You're feeling it. If you're making 100K per year, congratulations, you're buying 50K worth of stuff. You've been knocked right back down to entry level, you know what I mean? But we're all feeling it, right? You're working really, really hard. Let's say you're making $5,000 a month and living in a tent. Cool, you're good for like 1 ounce of gold at 4,500. In 2015, you could have bought like a stack of those things, you know what I mean? And the gold's not becoming more valuable. Civilization grows at 1% per year in real terms. The gold supply inflates at about 1% per year, keeps the gold dollar very stable. It's been stable for thousands of years. Could have used it at 1 ounce gold coin to buy a tunic, belt, and sandals in ancient Rome, and today you can get a nice suit. It keeps its value. It's the measuring stick for the pool. So the measuring stick is going up like fourfold in 10 years. The value isn't changing, but the price is, because the price is denominated in dollars. That's kind of like the currency pair, and it's not really gold in the vacuum of space becoming more valuable. It's the dollar imploding, and that's what's sending real estate higher, gold higher, Bitcoin higher, stocks higher, you name it. Pokemon cards, whatever. We got trillions and trillions of dollars chasing a limited amount of valuable stuff that people are trying to get. At the current rate, we're printing about $1 trillion every 90 days, and I suspect in the coming years and decades, we'll begin to print $1 trillion per day. It sounds crazy, but the Fed balance sheet right now only has like $8 or $9 trillion on it. But the Bank of Japan, the Japanese Fed, they have quadrillions of yen on their balance sheet. So look into your hazy crystal ball, you guys. Starting with those markets, we have the 10-year yield right now at 4%. In the last video, we talked about how traders were locking in those 10-year treasuries at a above 4% yield, because as the yield gets mashed lower, bond prices would be pushed up. Yields in bond prices are inverse. So traders are locking in that higher yield at 4.1% before ultimately yields get pushed down to 3.8%, pushing that bond they bought at a 4.1% yield a lot higher, the face value a lot higher. So we see that. We see yields coming down right now. They're at 4%. Looking into my hazy crystal ball, you guys, I think yields are going to keep moving lower. We'll be in the 3% soon. This is going to drag yields lower, rates lower, dollar lower, stoke inflation. It's funny, the PSYOP this week was falling inflation has pushed the 3 major stock indices to all-time highs. Guys, that's the PSYOP to end all PSYOPs. The CPI, aka the CP-lie, which is engineered never to show inflation, is falling, and it's pushing these 3 major stock indices to all-time highs. It's like me saying, because inflation is low, markets are hyperinflating. It's like, dude, look at the chart of the NASDAQ. That's the inflation. If you're wondering where the inflation that's coming down is hiding, just check the gold chart. Check the Bitcoin chart. It's right there. So you know, what they want to sell you this week is because inflation is coming down and we're moving closer to the Fed's 2% target somehow, that means we can justify 5 interest rate cuts in the future. And the market's already baked a lot of that in. Guys, when you have the 3 major stock indices at all-time highs, gold at all-time highs, houses at all-time highs, Bitcoins at all-time highs, Pokemon cards at all-time highs, Fed should be raising interest rates, not cutting them. That's unprecedented that we would have markets at all-time highs and then begin a stimulative easing cycle, aka weaken the dollar with markets already at all-time highs. Okay, sure. You know what that's going to do? It's going to push asset prices even higher. It's going to create an even bigger bubble, guys. Because remember, on this channel, bubbles don't burst. They double, then burst, right, guys? So, you know, we see bond yields coming down, see interest rates coming down. We see mortgage rates coming down, which is going to make your monthly payment a little bit more affordable with regard to, you know, borrowing money to buy a house. You're going to pay a lower rate on your mortgage. But what do you think lower mortgage rates do with lower interest rates and lower bond yields and a lower dollar? Pushes the price tag of that home straight up into the stratosphere. So looking into my hazy crystal ball, I think these bubbles are going to get bubblier. We're just now starting this easing cycle. We shouldn't be. It's an intentional policy error. And that's the part that gets me, guys. It would be one thing if the Fed were just accidentally, like, not out of malice, but just out of incompetence, cutting interest rates. But it's out of malice. It's an intentional policy error. It's not a policy error because they didn't know any better. It's a policy error that's intentional and designed to decimate the value of your salary. You know, I'm a millennial. I work, and I used to be able to get, you know, 4 ounces of gold a month, and now I get 1. And like we discussed, the gold value doesn't really change. It's just the dollar's imploding. So we got that 10-year yield moving lower. The bond market, the $250 trillion bond market, is giving the smaller markets like the $30 trillion gold market or the $1 trillion Bitcoin market its marching orders. Same with the $50 or $70 trillion stock market. They're taking their orders from the bond market. So make sure, guys, you're paying attention to the bond market, because I don't care if you're into Pokemon cards or trading Tiffany lamps. The prices of those things ultimately stem from not what's happening to that asset in the vacuum of space, but what the currency pair is doing, what the asset priced in dollars and what the dollar is doing. That's ultimately deciding the fate of that asset. So, you know, a problem with a lot of these Bitcoiners, guys, I know I have some Bitcoiners on this channel, and welcome. We love Bitcoin. We've been shilling Bitcoin since day one. But Bitcoin doesn't take its marching orders from things happening inside Bitcoin. As a matter of fact, Bitcoin doesn't change. Tomorrow, Bitcoin's not going to be any different than it was a year ago. I mean, you can build these like layer 2 solutions. You can do some cute stuff with it, like build some application into it. But the Bitcoin price hasn't gone from 20,000 to 115,000 because Bitcoin became more valuable. I mean, the network is only growing because the dollar's imploding. Bitcoin doesn't pay a yield. Bitcoin doesn't pay a dividend. Bitcoin doesn't do a return on investment. Bitcoin's like a gold coin. It's a speculative token. 1 Bitcoin equals 1 Bitcoin. 1 ounce of gold equals 1 ounce of gold. If you had an ounce of gold in 1980 and you have an ounce of gold today, guess what? Your wealth hasn't changed. You had an ounce of gold, now you have an ounce of gold. 1 equals 1. The nominal value changed because the dollar imploded, and that's kind of what we're focused on with this channel. So those yields are moving lower, those rates are moving lower. It's diabolical, guys. I'm not coming out here to be like, oh, I'm a permabull because everything's awesome and the stock market gets more valuable. No, I'm coming out here to be like, this is a dying empire. And as the post-American global order is ushered in, it looks like all those dollars we printed and exported globally come back to the domestic market and start chasing the same amount of Bitcoins or the same amount of Pokemon cards. And that's what you got going on. So the dollar, guys, very, very, very weak. And with these yields coming down and these interest rates coming down and these mortgage rates coming down, we're going to make the dollar weaker. And that's Fed policy intentionally destroying your country. We have to give the 1% that golden parachute. That's how empires collapse. That's how Rome collapsed through debasement. The British Empire collapsed through debasement. You know, the British Empire, their interest on the debt exceeded their defense spending, like right before they really just kind of withered away into irrelevance. And as of last year, the interest on the U.S. debt has passed defense spending. So there you go. Sorry about this. We got somebody building something over there. Hopefully stays a little bit quiet, but let's hang in there, guys. So we got the 10-year yield down to 4%. I think it's going lower. We got the S&P 500 right now hanging out at 6,791. It's up 62% in 2 years, guys. Do you think the S&P 500 became 62% more valuable in the last 2 years? Or do you think the dollar more likely took a 62% haircut? Looking at all these other asset classes, look like the dollar is the one that took the haircut, pushing that S&P 500 higher. Got the NASDAQ at 23,204, same thing. Up 81% in 2 years. Do you think it got 81% more valuable in 2 years? No. I mean, I would give you maybe like 3 or 4% more valuable, but how do you explain that other 75% in nominal increase? It's the dollar weakening. We got gold right now at 4,126 in the stratosphere, guys. We're up 105%. We got houses up only 7.4% in 2 years, but have you noticed, like, you know, that house built in 1990 that you're still living in, it's not becoming more valuable. People say, oh, it's the dirt under it. I guess a little bit of that. You can't print more real estate, but the reality is it's probably $50,000 worth of actual wood and material to build that $550,000 home. Why is the real estate price so high? The banking system is collateralized by real estate. It's part of the beast system. If you buy a home and you pay a mortgage, you're getting natural leverage there. You're levered, okay? Because that home needs to keep going up in value to keep the beast system feeding. You know, with civilization growing in real terms at about 1%, meaning if you put 200 people in the forest and you just watched them, their little village would grow about 1 to 2% in real terms per year. But the beast system, the 401k pension Ponzi, has an embedded growth obligation of like 8 to 12% per year. So as soon as we don't get that growth, like that real growth, we just print the difference, guys, and you've been living it. You know, these deflationists come out on YouTube and they just lead people the wrong direction, you know? So we got Bitcoin at 112,000 right now. It's a war zone at 111,000. Bitcoin's up 232% in the last 2 years, okay? I love Bitcoin. Do I think the network is going to continue to grow at 100% per year? Maybe, but it's kind of like with gold. If you're buying gold right now at 4,000 per ounce, hoping to sell in a few years at 8,000, be careful what you wish for, because I don't think as an American citizen, I want to live in a country where the gold price is 8,000. So be careful what you wish for. If that Bitcoin price is about to go to 200,000, be careful what you wish for, because that's coming out of your paycheck. These are speculative tokens. In the vacuum of space, they don't become more valuable. Got Intel. So back in August, we didn't really cover it too much, but it goes along kind of with the fascist takeover we've been talking about for the last 3 years. The government took a 10% Intel stake, guys, a 10% stake in Intel with $23 billion. So whether you didn't cut Intel a check for $70, but every American citizen de facto gave Intel $70 each, because the taxpayer is being used to fund the government's speculative Intel portfolio they're building, guys. And if you ask Grok, okay, if the U.S. government is taking a 10% stake in Intel, that's the government buying the private sector, is that fascism? And they're gonna be like, oh, no, it's not. But then you're like, bro, you're gaslighting me. And he's like, oh, okay, it's a fascist takeover. This is government ownership of a private company. It is a form of state capitalism. It is unprecedented outside of bailouts or wartime. It does give the government influence over Intel's board strategy and supply chain. It was done behind closed doors with no public debate. It does smell like cronyism when the same admin pushes America First policies while picking winners. Guys, this is diabolical, and I really mean that, like, literally, like satanic, you know what I mean? The beast system continues to feed. Do I think we should be buying gold right now? I think gold's not really a trading vehicle. So if you want to keep stacking gold for the long term, I think that's discerned. I think it's a great hedge against all the things we've discussed in this video so far. But again, if you're buying gold at 4,000, hoping we're at 8,000 in a few years, dude, that just means your $100,000 salary that started buying $50,000 worth of stuff this year will be buying like $25,000 worth of stuff in a few years. So it's coming out of your future paychecks. You know, every time Powell opens his mouth and blows more hot air into these markets, me as a millennial, my goalpost for retirement probably goes up by $2 million. So we think we're getting like a free lunch, and Trump gets to tout, a stock market at all-time record highs, and oh man, America's hot. We're so hot right now. Yeah, my goalpost for retirement is going up by like millions per day. Can you please stop? Because my pay hasn't budged. And here's why pay hasn't budged, guys. Pay hasn't budged because if wages were to keep up with inflation and asset prices, the boomers would be eating cat food. That would make inflation a lot worse. You know, dollars are only valuable if they're scarce and in a very few hands. So they really don't want to give you a pay raise. They want to keep telling you through the CPI or the CP lie that inflation's only 3%, while the real rate of inflation's double digits every year compounded. They want to give you a 4% pay raise, but pump the stock market 100%, giving them like 96% to the house and like, you know, a negative real return for all your labor. You know, time for labor, guys, is becoming a real fool's errand. The working man in this environment is a sucker. Isn't that sad? Because I am one. You know, it doesn't give me any pleasure, guys, giving you this rant right now. And I know I'm kind of ranting, but it's just kind of signs of the times, guys. It's like the book, A Tale of Two Cities, you know. It's the best of times, it's the worst of times. You know, read the opening of that book. It's kind of like where we're heading, you know. So I would study Rome and how they collapsed through debasement. I'd study the British Empire, the Spanish Empire, how they collapsed through debasement. Instead of being worried about deflation and the stock market getting cut in half, I'd be more worried about the stock market doubling over the next couple of years. I mean, what are you going to buy with your paycheck? Like one share of Home Depot? Like you used to get 30, but now you get one. Like, thanks for playing. Good game. You know, that's kind of, you know, where all this is going, guys. And it doesn't really need to be a political thing, right? You might be thinking, oh, this guy, he hates Trump. He must be like a liberal or something. No, dude, not at all. Not even close. But I'm discerned. And I've done a pretty good job of keeping you guys over the target. And I want you guys to win, guys. This channel's for winner. It's not for being Debbie Downer. So sorry if I'm coming off that way. But it's just the reality of the situation, you know? So if you're working $4, which if you're my age, you are, you need to get like a 12% pay raise per year just to remain at break even. That's kind of like your hurdle rate. And then if you want to actually make some money, you need to clear that hurdle rate. So if you're doing, you know, if you buy a mutual fund on January 1st of next year and it does 12% for that year, congratulations, you broke even. You need to clear that hurdle rate. You need to do 8% to cover the inflation, you know, the 8 to 12% just to cover the inflation for the year. And then you need to clear it to make any actual profit, right? And you're seeing that in the real economy. Have you noticed like going to Vegas is really inflated, or just any restaurant? It's like, guys, let's talk about restaurants for a second. These restaurant owners, which are very undiscerned, because I'll explain that in a moment. They're borrowing $1 million to open a restaurant, to work 60 hours a week, to do a 14% profit margin, when they could have borrowed $1 million, bought Tesla shares, not gotten out of the jacuzzi to check their phone, and they'd be up 50%. Opportunity cost, right? The opportunity cost of not buying Bitcoin has been extremely expensive for you. The opportunity cost of fading gold has been extremely expensive for you, because now you get to take your paycheck and you get 0.0000001 Bitcoin, or you get little shavings of gold, little shavings. Here's your little silver coin. Good game. Oh, you made $15,000 last month? That's a great month. Here's 2 ounces of gold. Like, that's what we're heading for, guys. It's a currency collapse. Currency collapse. This is how empires die. I want to reverse it. So you want to talk solutions? You want me to quit complaining and talk solutions? Let's do that. Raise the interest rate above the inflation rate, breaking the back of inflation. Now, is the Fed going to do that in the coming months? No, they're going to cut rates. They're going to literally do the opposite. You know, if your inflation target, like the Fed's been saying, is 2%, that's their inflation target, which we all know that's a lie. And then you're at 3% inflation, like the CPI just said last week. You're 50% above target on inflation. So to get inflation to come down, you need to raise interest rates. So what are they doing? They're cutting them. That's the opposite. That's the opposite of raising interest rates, is cutting them. That's like saying, man, my house is on fire. I'm calling 911. And then the fire truck pulls up. They bust out the hoses. They set everything up. And you're like, oh, thank God you're about to save my home. And then they start spraying gasoline all over your house fire, creating an inferno, a firestorm. That is exactly what the Fed's doing, guys. It's disgusting. It's diabolical. It's intentional. It's engineered. You know, they did this in 2015, guys. I was watching the tape since 2009. You know, I'm still a young buck, but Been watching the tape in real time for like 15 years now. In 2015, the Fed was supposed to be raising interest rates. They were supposed to be getting the interest rate back to like 7%, which is the historical average, to prepare for the next recession. What happened by 2019? We've only raised to 1%, not 7% like we were supposed to. Then COVID happened. Now their pants are around their ankles and they can't cut from 7% down to 0% to stimulate and save the economy. They cut from 1, which is nothing, to 0. And then Powell would say, we're not even thinking about interest rates, raising interest rates. And they said that for like 3 years while they added 40% to the money supply. Crazy, guys. So what do I see? More of that. You know, being an American citizen, it's going to look a lot like being a UK citizen or a Canadian citizen. And then eventually it's going to look a lot like living in Mexico or living in Bolivia or living in Moldova, or, you know, pick your tiny little fledgling economy with double-digit inflation every year with no social upward mobility. Very, very, you know, it's kind of like, guys, there is a stone wall running down the center of this economy in the United States. And depending on which side you're on, you're good or toast, right? And it's very hard to climb that wall to get to the other side. I mean, if you're starting at 0 in this economy, like you're a college kid, you just graduated college and you're entry level, dude, if you're starting out at 0, well, you need to run those numbers up to 1 million just to be in the 10%. 10% of Americans now are millionaires, okay? But if you own a junky dog box somewhere in California, you're already there. So it's crazy, guys. Remember the show Who Wants to Be a Millionaire? It's completely lost its meaning. Now being a millionaire puts you like in the top 10%. But $1 million, that's not even adequate legal protection for you and your family. It's nothing. And if $1 million is like the new modest, you know, the modest standard of living, that makes things like $10,000 a rounding error to those people. And a lot of us are out there busting our butts for $10,000. But it's just a woo-woo. It's just a woo-woo and a fugazi. It's never landed. It's not real. It's not on the elemental chart, you know, like gold, like silver, like platinum. Things we've been talking about in this video. So we're going to keep going, guys. We're going to be okay. Just be discerned, okay? Fade all those deflationists on YouTube, guys. They're telling you to hide under a rock and get ready for the crash. You know why this isn't 1929? That's a tiny little plane right over my head. What's up, homie? He's got his private pilot's license. But it's crazy, guys. We're going to be okay. We're going to keep going. We're going to stay over the target. Fade all those deflationists on YouTube. You know why this isn't 1929? Because back in 1929, in the Great Depression, dollars equaled gold. They were the same thing. They couldn't print more dollars because they were gold. They couldn't get more gold. If you can't get more gold, you can't print more dollars. That creates a deflationary death spiral. If dollars are gold, you should save dollars. That encourages hoarding and deflation. Prices come down over time. We are not in that reality. Money is fake. Well, sound money is gold. That's real. Currency is fake. Dollars are fake. They're getting faker. Okay, you cannot take your $20 bill to the bank and leave with some gold like you could pre-1971. If you read the top of your $20 bill, it's going to say Federal Reserve note. Those $20 bills don't even belong to you. They belong to the man upstairs who decides the value of them. So that's why we don't like cash on this channel. We don't like cash. We don't like bonds. We don't like paper. We don't like fixed income. We don't like value. We like growth, 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 and speculative tokens that mirror the collapse of the currency. That's why we've been bullish gold. That's why we've been bullish crypto. That's why we've been bullish energy. That's why we've been bullish tech. We're waiting for energy to play out. I think that's the next shoe to drop. I think crude oil being at like 60 a barrel is like the odd one standing out. But I don't think crude's going to get cheaper because we're awash in crude, like you might be hearing on some channels. I think crude's going to go higher, and it's going to push inflation, core inflation, a lot higher because the 6,000 petroleum derivatives you use every day that are made of oil, you know, it's all oil. This shirt's polyester, oil. Sunglasses are oil. This chair, oil. This fabric is not natural fiber. It's not cotton. It's not leather. It's oil. It's all oil, guys. So I think that's the next shoe to drop. Energy prices are going to start moving up. I hope not, guys. And we do need to raise those interest rates. You know, I could make Bitcoin $1 tomorrow. Make me Fed chair, I'll make Bitcoin $1. How will I do it? I'll raise interest rates up to 20%. If I'm paying you 20% on your savings account, you don't need Bitcoin. You don't need stocks. You can just save dollars. But is the B system going to do that? No, absolutely not. The way the B system works, you know, we give the Fed a lot of flack for engineering the collapse of our currency, printing all this fake money, you know, so we give a lot of flack to the Fed and Treasury for being a revolving door that's destroying your country. and destroying the average American citizen. But we also got to remember the commercial banks, guys. They're doing credit creation too. So I could go to the bank right now and I could get a loan for $10,000, and they would type in 10,000, hit enter. That's just a digital entry in an Excel spreadsheet. It's not like they had $10,000 in the safe and they go get it and hand it to me. We just created new money, and they created new money right there on the spot. Now I owe them $10,000 from the real economy plus interest. So they just did some labor intensive strokes of the keyboard, click, 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 click. And now I have to spend the next few months as a business owner out there rat racing for currency that's supposedly scarce in the dusty, deflated laundry token economy. But you flip over a rock in the financial system, there's like $20 billion under it. So it's all a psyop, guys, but we're going to be okay. And you know, I hope this is getting through to you. I'm not here to just like crap all over you. We could change this, guys. We could change the trajectory, but it would really be an inverse of all the policies you're getting. So if you want to get out ahead of this, if you want to be discerned, study policy, study the knock-on effects of policy, study these institutions and their embedded growth obligations, understand what intentionally bad policy and engineering the collapse of your country looks like, and then understand that those knock-on effects give the 1% in your country a golden parachute while everything else just becomes diaper dust, you know? So we're going to be all right. We're going to keep going. I still like gold. I still like silver. I still like Bitcoin. I think Solana is a $1,000 coin. That's an altcoin. I could be wrong. That's a little speculative. I think Ethereum one day will be $10,000. I think gold could be $10,000 in a few years, but be careful what you wish for. You're not going to want to live in a country like that. So they could send it lower. You know, they could, but they're not. Did the bank send you an email in 2022? Did your bank send you an email in 2022 saying to buy gold at 1,700? Oh, they didn't, but I did. Oh, but now they're saying to buy it? Weird. It's almost like you're the bank's counterparty. It's almost like when you deposit money into a commercial bank, that's your asset and their liability. It's almost like they're on the other side of the table playing you like a deck of cards. Weird. Do you think the banks were buying gold in 2022 at 1,700? Yeah. Were they telling you about it? Nah. Welcome to the PSYOP, guys. So stay discerned, stay over the target, pay attention to the things that actually matter, like death and infinity, the big stuff. They're going to try to trip you up on the ballroom and all sorts of stupid stuff. They're going to try to trip you up on regime change in Venezuela, which might be true. And that might be one of the reasons crude oil is only 60 a barrel, guys. Maybe the market already knows that we're going to go in and just take it all. And if we can take Venezuela's oil and flood the market with cheap oil, the price is going to come down. So, maybe we could be looking at regime change in South America. But we do that all the time, guys. We did it in Grenada. We did it in Cuba. We did it in Nicaragua, in the Marine Corps anthem, from the shores of Tripoli to the halls of Montezuma, whatever, the Marine Corps hymn, right? From the halls of Montezuma to the shores of Tripoli. Montezuma, guys, Mexico. So we do like to go south of the border and stir things up and promote regime change. What else is new, right? I guess the weird thing that I'm going to leave you guys off on that could be changing, and maybe it's making gold more valuable in the vacuum of space, is China, the BRICS countries, look to be back in that yuan with gold. Man, not good, guys. Not good. So watch out for that changing global order. Understand the knock-on effects. I love this country, guys. I'm not here to be an expat passport bro and be like, man, this country's cooked, let's leave. Guys, I was born here. I've served this country. I'm gonna die here, okay? Looks like I'm going down with the ship, right? Unless we can write things, So being a millennial, being a Gen Xer, being a Gen Zer, you're going to need to understand that a lot of these older boomers holding all the power and all the chips, they're destroying you. But I'm also not going to say the boomers are evil, because a lot of these boomers, guys, are living on fixed income right now. They're living on like $1,800 a month in Social Security. So that's a half ounce of gold. You know how cooked they're going to be when gold's 8,000? That's going to be a quarter ounce of gold a month they're living on. And the gold value never changed. So this is the way things are going. We're going to keep going. I love you guys. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, okay? I hope this video finds you doing well. And I'm doing well, guys. We're going to stay out ahead of these things. We're going to stay front running, all right? Till next time.